just being in this environment, I mean, you can feel the energy in the room.
We get the inspiration, the information, we can bring it in practice. It changed my life.
This is going to be an unbelievable event for you, I promise you. Don't miss anything.
I'm having an awesome time at this conference. It has far exceeded my expectations, and I will definitely be back next year with my entire crew. That's how much this has been an enjoyable experience for myself and the people that I came here with.
When I tell you the magnitude of just the aura of people that are around me, I'm sitting next to a guy right now that he makes over $50,000 a month, and he wants to network with me. Invest in yourself.
So yesterday, we had back-to-back amazing speakers, and I'm like, what's gonna happen today? Like, what's left? And then we get here and Snoop Dogg comes out. I mean, that in itself is a treat.
There's no way you're not going to get so much information out of a conference like this because the speakers are so different. So I'm learning from listening to other speakers also. So to be here and to be able to listen to several, you're going to get so much information and just kind of clear your mind and take it back to your own life.
I don't know how you can call yourself a business person and not be at this event.
Hey, welcome Facebook, welcome. Hope you call in today, 305-865-8668, 305-865-8668. Give me just a minute though. God dang, y'all jumped on it, okay? Because I'm gonna be talking about loans today, okay? How to borrow money, Robert?
How you doing?
Good, man, how you doing?
Good, how are you?
Robert, Ryan Secco's in the house. Captain Ryan.
How you doing?
How you doing, Robert? Man, y'all pulling in on me? That looks good, John.
That looks real good.
Real estate?
Hope you're doing well. Everything real estate.
Can you hear me?
We make real estate investing simple. I'm going to be talking to you about the 4 ways to buy real estate. I'm going to be talking to you the things required when buying real estate. I'm going to talk to you about the 4 types of real estate that we talk about. And I'm going to be talking about, involved in all that, is you're going to run up against a few things, one of which is how to get a loan. You're going to learn how to get a loan. I'm going to teach you how to get a loan, Nobody taught me how to get a loan, so I had to go do it the hard way. Hey, will you give me a loan? No, man. You know, we're not going to do that. Welcome, because every Monday at 12 p.m., you know what time it is and you know what day it is when I show up to talk to you about real estate. We're talking about real estate investing made simple. People call in, they ask me about their deals. I want to help you buy your first deal. I'm going to show you how to buy your first deal. I do this show. A lot of people ask me, Ryan, Captain Ryan's here, Ryan Secco, Robert Sislo, the video genius, also known as the Cisco Kid. We got the A-Team in the house. We got Johnny Boys on the cameras. And people say, man, why do you do this show? Okay, with everything you have going on, I had a buddy of mine ask me this weekend, why do you take the time on Monday, first day of the week, to do a show free of charge talking to people about real estate? Well, at 6 o'clock this morning, I was watching a 1-hour interview on Michael Milken's institute, his institute about real estate investing, okay? And what's Natalie doing? She's just going to have a whole conversation with the guy?
Yeah. She's got 5 callers on the line.
I'm getting the deals ready.
That's good.
Yeah.
So I'm watching this thing for 1 hour this morning from some of the smartest financial people in the world talking about real estate and why it's been so good and why it's such a good place to put money. And the reason I do this show and the reason I spend time researching this is, number one, I believe this money is important for my family, for the future of my family. I can't invest in a stock today. There's not one company that I could invest in today and I know for sure 30 years from now they're going to be around. I just don't know that. Okay, I could give you a list of 50 companies. By the way, we should do this after the show's over. I can give you the names of 50 companies that have gone out of business. Okay, that were great in their time. At one time, Pan American's out of business. They still have buildings named Pan American, but nobody even. I say, do you know what Pan American is? Do you know, Ryan?
No.
Ryan's a pilot, huh? Airline company, okay?
They're like one of the first ones.
Oh,
exactly, okay?
Pan Am,
yeah, Singer. Anybody know Singer? They're over a 130-year-old company. Pay dividends for 97 years or something. Singer Sewing. Do you know what a sewing machine is, Rob?
I do, yeah.
So these companies went out of business because things changed, okay? Because of macro big means big things happened around the world, okay? And one of these big things that happened was women started going to work in the 1970s. And when they did, they didn't need sewing machines anymore. So this company that was so dependable, such a leader in a space, boom, overnight, bye-bye. Literally overnight, within about 18 months of this happening. They could not deliver the dividends that they once delivered. Now, I'm telling you all that because I do this on Mondays because I believe real estate investing is vital to your family. You can't just do what your parents did with the banks, okay? Albert Einstein, I covered this on Friday. Albert Einstein said that the rule of 72 was one of the great, I think he said, the eighth wonder of the world. Look, the rule of 72 only worked when you had interest rates at 7 and 8%, okay? You're earning less than 0.5% at the bank today. The rule of 72 is not, and Albert Einstein, as smart as he was, dude, I don't know how much money he had, but I know I'm worth more than Albert was, okay? Albert might have been smart with calculus, but he was a dummy when it came to money because the reality is the rule of 72 does not work on interest rates of 0.5%. What should have been the eighth wonder of the world is high interest rates, if you have money, is good for people with money, and low interest rates, if you don't have money, it's just good for everybody. Okay? You know why? Because the people that are rich get richer because they get to use their money. It drives up the cost of assets because I can pay more for this asset because my rates are low. I'm telling you all that to tell you that part of the deal with the real estate game, okay, there's 4 ways to do the game. You remember, right? There's 4 ways to play the game. Number 1, you buy it yourself, okay? That's really what this show's set up for, to show you how to go out and buy this stuff yourself. 4 units, 8 units, 12 units, 16 units. Number 2 thing you could do is you could go a REIT. By the way, that is not buying real estate, that's buying stock. Okay, I strongly discourage you from buying a REIT, even though you would get a higher return than you're getting at the bank, okay? You get a higher return, you get a return with what's called a dividend, okay? But you get the ups and downs when you go to sell the property. The thing people like about the REIT, though, is it's liquid. I don't want liquidity myself, okay? I think liquidity is a bad word. Only reason I'd want liquidity is because I'd want to go out and purchase things. Most people that have liquidity, they say, but I don't have my money. Dude, you don't need money, okay? You need to go out and earn new money. The last thing you want if you're on the way up, if you're on the way up, if you're trying to create something, liquidity is not what you want. You want money working all the time, okay? It's on the way down, okay? Sam Zell, he's spiritually moving into the end of his cycle. So he's gonna be much more conservation. If you're on the way up, you want to spend money. You don't want to save money in the beginnings of your cycle, okay? If you're a coward investor, okay, you wouldn't want a dividend here, even though it'd be nice to have it. But what you don't want is this. I don't want the down. I want the up only, okay? And I want the benefits, particularly if I'm earning money. I want the benefits of real estate, which you don't get in a REIT. The third way to do this is with a syndicator. Basically, you just find somebody, a fund, hedge fund, they're buying real estate, you invest money with them. Most of the times you can't get to know those people. Or you could do what we're doing at Cardone Capital, where there's a guy at the helm that you know that's heavily invested in real estate. This is the last way you could do it. I'm showing you the 4 ways to buy real estate. They all have one thing in common. Ryan, what is it?
They all need debt.
They all need a loan, okay? If you're buying a deal, you're probably gonna need a loan. I had a guy in here the other day said, me and my family were thinking about buying deals with all cash. I'm like, bro, the first way to buy real estate is by yourself, okay? The last thing you'd wanna do is buy real estate by yourself without a bank. Just because you're gonna do it by yourself. Well, my family doesn't like debt. I don't care if they like it or not, okay? They're thinking in a primitive moment in time where, are they Muslims? No, they're not Muslims. Well, good, it's not against your religion. Borrow money, bro. You want to use it to leverage, and I'll show you why here in a second. The REIT is definitely going to borrow money. The syndicator is going to borrow money, and I guarantee you at Cardone Capital, we're going to borrow as much money as we can because I'm getting money for 4%, okay? I'm getting money. Look, the banks believe in this property so much, all right? They believe in it so much They want me to go get money. They're like, this is an asset we can't get enough of. I'm talking about the bank now. The bank wants this, okay? Now, I'm going to show you there's 4 different loans you could get. First one is a commercial, a residential, okay? This is the type of loans you could get. You could get a residential loan. That's going to be 4 units or less, and you're going to occupy one of them. This is a pretty easy loan to get, by the way. Now, we've talked about in earlier shows, and if you haven't tuned into some of those shows, you might want to go back and look at them. They're archived at Grant Cardone TV. Number 1 is commercial, residential. This is a fairly easy loan to get, by the way. I would strongly recommend you get this loan over a home loan. Okay? Go to 4 units because your next stop is going to be commercial. Okay? Now, the reason I say this over a home loan is because this loan will actually be easier to get than a home loan is, because it's not just based on your credit anymore. It's based on 2 things: your credit, your income, 3 things actually, and this is going to be added to your income, okay? Because this earns income. A home does not, look, there's just no income. I've never seen a house that had income. If a house ends up with a lot of income, it's going to be called a hotel, and it won't be a house anymore. Like if you saw the movie Bloodline, they lived at their home and you see it? Yeah. It's a great show, dude. Okay. The third type of well, these are the basic 2 types of residential loans, right? Okay. Now, what are you going to need to know to do this? What are you going to need? What is the bank going to ask you for? Okay. Hey, you live in there? Good. Okay. What's the income of it? Who's going to rent there? What's it going to cost? Right? Can it cover the debt? Same thing here, the commercial. The difference is here, we can go from 4 units to 12 units, 40 units, 400 units, 1,000 units, okay? The bigger you get, the bigger this deal gets, the more they're looking at the income of the property and the less they're looking at you. Now, that being said, and one other thing I want to note here, this is probably going to be a 95% loan, the residential, and this is probably going to be, you should figure a 50 to 75% loan here. All right? I'm going to take your questions here in a second. The easier it is to get, the less money there is to make. The easier it is to get, the more trapped you are. The easier that loan is to get, I'm talking about this loan, okay, the less it will be worth, the less money you will make, and the fewer buyers that will be available for that deal, okay? So when we look at commercial deals, I'm looking at a deal right now in Houston, Texas. Nobody's going to be able to make sense of this deal. We just finished having a 40-minute meeting on this, me and Ryan. Nobody else is going to be able to make sense of this deal. I know, because I'm looking at it, I'm like, there's no way, dude. 500 units. It's not producing enough income. Oh, the location's so good. Okay, I keep going through this. I'm like split personality. What was it, Jekyll and Hyde? I'm like, oh, I want to be good. No, I'm not. You know, Phantom of the Opera. I love her. Let's kill her. Whatever, right? And I'm like, I want to buy this deal, man. Nobody else can make sense of this deal. Nobody will be able to make sense of this deal. Nobody will pay this much for this deal. I know this deal's worth the money. I know this deal going forward. Now, the point, I'm telling you that because I know the bigger the deal gets, okay, the more desirable it's going to be in the future. And the bank knows this too. Now, the bank doesn't know everything. They're not going to know the real estate thing like you know it, okay? You got to know what happens here, okay? They're going to look at 3 things, and I'm going to take my first caller. Number 1, they're going to look at net worth. Trust me, they will look at your net worth, okay? They're looking for how much net worth here. Ryan, what do you think? Equal to the loan amount until you get big. And then they're like, okay, whatever. Okay. But they will be looking at how much net worth do you have. I'm talking about when you play down here. When you play up here, they're not looking at anything. Mm-hmm. Anybody can get this loan. I'm telling you. Yeah, we'll give it to you. Okay. You don't have to do a long one, just like, yeah, we'll lend you the money. Okay. Okay. Maybe. You could probably even have some bad credit problems here and still get a loan, okay? Down here, though, they're not going to look at your credit first. They're going to look at your net worth first. Second thing they're going to look at is your credit. But I'm going to tell you something. If you got enough net worth, they don't care if you got 7 or 8 bankruptcies. If you got enough bank, yeah, man, I beat her up. Yeah, I didn't pay them. No, I don't. Yeah, how much net? Okay. Right? If you got enough net worth here, they'll take advantage. Like, I don't think they pull my credit score, do you?
No.
I don't know if they do or not.
Probably not.
I know they used to. You know, I remember how hard it was to get my first loan. And the third thing is, and this is what everybody doesn't know that's doing the real estate game, is your track record. Can you manage the property? Look, I know people with the first two, net worth's there, the credit's there, no management history. They can't manage 500 units, $85 million. They don't know how to manage problems and situations and economic turndowns and contractions in markets and difficulty in competition. Let's take the first caller. Okay.
Parrish and Philly.
When I did my first deal, Parrish, okay, I went to 3 banks. The first 3 banks I went to, none of which, by the way, even lended money on the product I was asking to lend money on. So I didn't know. Hey man, the first question is, do you even loan money on apartment deals?
Yeah.
If I'd asked that, they'd have said no to that rather than no to me. Go ahead, what's your question?
Hi, Grant. Thank you so much for taking my call.
You got
I
it.
have no idea how valuable it is to get someone like you to get their attention and get them to look at our deal, so I really appreciate it.
Thank you for saying that.
So I just want to jump in right now. So I am trying to construct like a 34-unit portfolio. You know, could be 20 to 33 units, depending on which deals I should do. I'd love to get your thoughts on if I should do it or not, and just to see your overall thoughts on the deal. One part of the deal is a 12-unit deal. It's a really important part of the deal. I'm competing with another bidder on it, I think, and if you think it's a good idea, I'd love to also get your thoughts on how I should communicate with the broker and deal with trying to secure this deal.
Okay, what is the deal?
Okay, so is it the South Slate Road deal?
Yes, that's the 12-unit deal. Yes.
Okay, so it's 12 units. Purchase price is $1 million. 12 units.
How much is your down payment?
$250.
Okay, so are you able to go to $350 if necessary?
Yes.
Okay, good. So one of the things, I'm working a deal right now. There's $65 million of debt on it. I'm going to assume the loan. Oh, by the way, when we first asked him if I could assume the loan, the deal's how much? 87 million?
87, yep.
It's $87 million. It's got a loan on it right now of 65. So we did all that research. We knew there was debt on it already. Hey, can I assume that loan? Okay, because if I could assume this loan, it's with Fannie Mae. I said, look, Fannie Mae, they love me, okay? I'm buying it from a company that Fannie Mae loves more than me, though, okay? Because this is a multi $50 billion company. I'm not a $1 billion company, right? So Fannie Mae's got a loan with this guy right now, and I'm like, hey, can I take this loan? First thing we were told, absolutely not. A week later, they're like, hey, would you assume the loan? I don't know what changed. So my point about that is this: when you're pursuing a deal, and by the way, he's asking the right questions. How do I go after the broker? When you're pursuing a deal, you got to have the right data, and you got to be willing to persist. That's why the sales game is so important. Negotiating is so important. Reading people is so important, right? So in this deal, because when I got them to assume the loan right here and said, yeah, you can assume the loan, what came up in the last phone call was, what if they don't let you assume the whole $6,500 grant? They might want to take this down a notch because you're a new borrower. So that's why I just asked him, would you be willing to go to $350 if you needed to? And he said yes. So one of the ways when you go to the broker, my brother, is you want to tell the guy, hey man, look, we're prepared to put 25% down, but would be open to, if necessary. See, you want to sell the broker that you're the guy, and I'd want to show him that money going in. Okay. Now let me make sense of the deal first. Okay. You like the deal already? I mean, you want to do this deal.
Love the deal. I know I want to do the deal at price. I don't need to negotiate. I'm ready.
Okay, good. So it's $45,000 worth of debt. Where's your money coming from? Do you know?
My parents.
Oh, the debt's coming from your parents?
Oh no. Sorry, the debt is coming from banks.
Okay, so the bank's going to ask where your debt's coming from. So your parents are going to be on the deal?
Yes.
And what's the NOI of the property?
$72,000.
Okay. Yeah, so, I mean, this deal is going to make $32,000 a year, $2,850 a month. He's going to put $250,000 down to do that. The question does it make sense? What is that, 12%? 14%?
32 divided by 250.
It's 25,000.
12.8.
It's 12.8. What year is the property?
1960s.
Yeah. What's the location?
It's like 3 miles away from Philadelphia.
Yeah. Okay. So you love the deal. You love the deal. You think it's awesome. So I think it's all going to be about the bank now. I mean, it's going to meet the DCR. DCR is a very important term when it comes to borrowing money. Okay. It's going to meet the loan to price. So I don't think your debt's going to be a problem. It's going to be about your parents and whether you want it or not. So we just got Parrish a deal. He's going to buy a deal in Philadelphia, $1 million. By the way, Parrish, I'm sure you're still listening right now. You don't need to pay $1 million for that deal. Okay. I would try to buy that deal if your parents are on board. By the way, if your parents got $250, I bet they got another $600 to go with it. Why don't you just go stroke that dude a check? I mean, the way I would do this deal is, if you could, what I would do is I would try to pay cash for this deal. Okay, stabilize the rents, get the rents up a little bit. I saw it online. It's a decent looking deal. Don't know about the yellow. Yellow's a little hard. Okay. But I painted a deal yellow that I made a lot of money on, and it's got a good return, you know. But look, man, if your parents own, if you can't get them to pay cash for that deal, why don't you just go step into a bigger deal? Because the only problem I have with this deal is what, 12 units? That's the biggest problem I have with this deal, man. It's 12 units, 80 grand a door. I don't have a problem with 80 grand a door. That's not a bad deal. A little bit of a problem with it being so vertical. You didn't see it. But I saw it. It's a little vertical for me. Hey, but you got to start somewhere, okay? How fast can you get in? How fast can you get out? Can you get a loan on the deal? What have I told you so far, okay? 25 to 35% down is what you should be looking for. Maybe as much as 50% down, okay? If you can't do that, you're not ready for that deal, okay? Next caller. Okay? I've talked about net worth. Net worth, they're going to judge three things. Your net worth, your credit. What's the third thing they're going to judge?
Track record.
Track record.
Probably the biggest.
Okay, all right. What's the name?
John in New York.
John, what's going on in New York?
Hey, Grant. What's up, brother?
Good, man.
Hey, listen, last time I called in, you were gracious enough to give me a ticket to 10X. I did end up going, had a great time, so thanks so much.
You're welcome. Thank you.
Yeah, yep. Okay, so here's the deal. This is my first deal. I initially was going to go 4-unit, and you kind of talked me out of doing the whole FHA thing. I've rounded up a 10-unit. I did have to raise cash on it. The LPs wired in their money just last Friday. We've signed a contract. We're moving over to the bank phase now. I am having a bit of trouble because my credit isn't spotless, and also my track record is not there.
Yeah.
But nonetheless, let's take a look at the deal. It was listed at $740. Got it under contract at $675. It's a 10-unit deal. NOI is $71,200.
NOI is what?
$71,200.
Wow, I like that. That's nice.
Yep. It's a solid 10 cap. And the cash flow after financing should be
beautiful.
Depending on what assumptions you use, should be $30,000 on year one. So this is the deal. I'm raising $170,000 on it. I put up 25, but I'm keeping 30% equity due to being the GP.
Yeah.
And the LPs get a 70% split.
Yeah. Okay. So. Yeah. So. How are we going to get a loan on this deal? So this is what he's figured out how to do. He's going to raise 107, and you're going to throw in 25, right? So 200 grand down.
It's 170 total, of which I'm throwing in 25.
Okay, 170. Okay, and you're going to put 25,000 down. Okay, so that's fine.
That's right.
Okay, now you're going to manage the deal, and I mean the loan's fine. The loan's not an issue. Okay, because this loan's going to cost him about $31,000 a year. It's going to be a $41,000 cash on cash. Is that right?
Well, I ran the numbers after the 71 NOI. free cash flow ends up being like $30K on year one.
Yeah.
Just about.
Okay. Well, then what changed here? Because I mean, what do you have the debt at?
The debt will be $540,000 for the mortgage.
Yeah. 540. Okay, but
Right,
that's 300. That's 320,000. That's $32,000 a year.
Right.
What do you have as a debt?
I have same thing I mentioned. I think for the 170 that I'm raising, that includes also closing costs and a bit of working capital. So maybe that's where we're.
Okay, but either way, dude. Either way, I mean, you're making a lot of freaking money here. Okay, you're putting you're making 22% on your money.
Yeah.
That's a 22% return. Like, what's the problem?
There's no problem at all. Moving forward with it, I guess I just wanted to ask around your syndication methods. Is it common for a GP to invest cash and retain an outsized equity portion relative to their investment?
You can do whatever you want. You can create that thing any way you want. By the way, there's no unfair situation. Okay? There's no unfair situation that you could create. You could do this a whole lot of ways. I personally don't like the way you set it up. It wouldn't be attractive to me. I would treat things different, okay? I would be like, okay, 25, first of all, I treat money, all money to me, my dad taught me this. If you don't respect other people's money, you won't respect your own. If people abuse other people, they abuse themselves, right? If you beat up, you know what I'm saying? Like if you're not gonna be professional to other people, you're not gonna be professional to yourself. People can't turn on and off like that. So the one thing I would do is this 25 grand you're putting down, I would just make that the percentage that you owe, dude. That's your money, okay? You shouldn't get a premium for that. That should be just like 12% or 13, whatever it is. You're a 13% owner in the money, in the equity. You with me?
Mm-hmm.
Okay. Then, okay, down here, you're gonna everybody here on the money participates one way, okay? Huh? Maybe that's a Class A shares.
Whatever, yeah.
Okay, we don't need to complicate it. Ryan wants to come in with all this legal mumbo jumbo.
No, I'm just trying to keep it separate.
You're going to have a deal with the bank. You see the bank right here? The bank's going to have their own deal, right?
Uh-huh.
They're not going to be an owner in the company. They just want what? What are they going to want? 4 or 5%? What's the bank going to want? 4 or 5%?
Their monthly payment?
Yes, sir. 4.5%.
Good. Then down here, man, this is where you figure out your percentages. Okay. So on a deal like this, dude, this is what I want. This is how we structured our deal, okay? We structured our deal at Cardone Capital on a 6% return, okay? Now, the reason we did that is because I believe in all my properties, I believe I can get, probably the wrong way to do this. Probably I need to put the 6 down here. By the way, there's a lot of groups out there that will promise you a lot more than 6, 7, 8, and you're like, that's not a lot more. 2 points on 6 is a lot, okay? The reason they do that is because they don't have as much trust with their public, right? And the reason mine is lower, it's not terrible, but I'm saying, I'll tell you right now, you could find a higher preferred return, but the reason I did that is because the people that invest with me know that I'm up here for this, okay?
Right.
Because I do a 65-35, 65 to them, 35 to me. The investor gets the majority, but I want people investing with me that are pulling for me, man, right? They're like, go, Grant, make a bunch of money. I don't want people that don't want me to make money, because what your investors, if you have the right investors, some of these guys, like, they just want to buy the deal. And they just want to buy the deal and manage the deal. I'm not interested in managing the deal. I got enough stuff to manage. I'm interested in managing it so we can make a freaking wham. Okay, I want to have a freaking party. I want to kill something.
Okay.
So every deal that I'm looking at, hey man, how do we exit? So that's the other thing you need here. What percentage do you need on the exit, man? Now, some guys put together these what's called waterfalls, okay? At this rate, I get X. At this rate, I get X. At this rate, I get X. You could do that too.
Okay.
Okay, because
So you're recommending that we do ownership based on contributed capital, so no premium, and investors get the preferred return, and then we just look forward to kind of the exit.
Yeah, exactly, dude. That to me be like, hey man, you put 25 grand in, my 25 grand is gonna be treated just like your money. Even Steven, dude, but I'm gonna do all the work, okay? Number two, me doing all the work means I make all the decisions. All of them, the good, the bad, the ugly, okay? I don't need any bullshit from anybody coming in telling me I'm gonna do something different. You do not want those partners, by the way, okay? Right. Number three, well, how do we know you're gonna do the right thing? Because number three is gonna make sure I do the right thing, okay? Because when I hit 6, I only get 6. When I hit up here, I get X. When I get here, I get X. And when I get up here, dude, I'm getting all of it. So there might be a level where, hey, if I get to this return, I mean, you look like you're a 22% return. Hey guys, if I get to 16, I keep everything above that. So you just took that guy from 6 to 16, you threw another number up. I'll tell you what I'm gonna do. My compensation is gonna be what makes sure we do the right thing here. Right? You understand? Right. Anything above 16, I keep all of it, man. All of it. Okay? Why would we do that? Because, bro, that's what's going to guarantee I get to 16. You get it?
Perfect. Yep.
Okay? You get it, John?
That's perfect.
Okay? Yep. So if they're smart people, dude, they want you to get there. And by the way, they want you to get above that. Okay, now the only problem I would have with that is, hey, when you're gonna sell, dude, because you're getting so rich on those other 6 points. Truth is, you're not getting rich. I mean, the only way to get rich in this deal because of the size is to sell it. Okay, hope that helps, man.
John, thanks so much, brother.
Hey, John.
John,
you still there? Hey, just one quick thing. As far as your top line, as far as all your rents go, just make sure you're working with real numbers. All Grant's deals, he gets the real T12, the real numbers. I noticed on the financials, all the numbers are rounded. You know, like the 1 bedrooms are 900, the 2 bedrooms 700. I'm sure all those numbers aren't real, and so I would just go through all your income, all your expenses, to make sure you're really getting a 22%. You know what I mean? So I don't know how you're doing your taxes, but if 11,000 is right, then 11,000 is right. But I would just go through all that and make sure it's all correct.
Oh, perfect. I appreciate that. I did get the leases.
The chances of those numbers ending in zeros is like you have as good a chance of winning a lottery ticket. They're just not.
Thanks, Tom. I appreciate you.
Yeah, thank you.
I've never gotten anything from the federal government that ended in a 0.
Yeah.
And if I do, I challenge it every time. Okay. My name's Grant Cardone. Every Monday, I come to you to talk about real estate. We're talking about debt today. We're talking about debt. They're going to ask you 3 questions at the end of the day, folks. Hey, what's your net worth? Oh, by the way, they don't ask me any questions anymore. You know why? After the first 2 times, I'm like, here's everything you want to know about me. Okay, I gave them the package the day I met them. Do you do real estate loans? Do you do apartments? What's the biggest amount you can approve? Like, I know what to ask people now, okay? Do you guys do apartments? Northern Trust right next door to me. I'm like, are you guys doing apartments? Yeah, we do them. What does that mean? Yeah, we do them. Okay? Like, dude, do you do apartments? Yeah, we love them, right? Yeah, we do them. That's not that means what? That means we don't do them.
Yeah.
Okay, and only to find out, yeah, we're not doing them right now. They just can't tell people, no, we don't do them. Okay, so number one, do you even do this type of loan? Okay, here's my net worth. Wham! I give it to them. This is all for my selling programs. Why would I have somebody ask me a question I know they're sitting on, okay? Here's my net worth statement, okay?
Credit.
I feel good about it. Here's my credit. The last time I pulled it up, oh, by the way, there's 2 things I'm late on. They were both disputed. I'm never paying them back. It ain't gonna happen. One's from 1987, the other one's from 1994, right? So I tell them what that is. And the third thing is
track record.
My track record, okay? Well, I don't really have a track record, except for the 4,000 apartments I currently own and manage. You know, I'm still a little dude, figuring my way out. Okay, now every market that I've gone into, you know what they challenge? Have you ever bought in Orlando? Have you ever bought in Charlotte? Have you ever bought? They're bankers, they're stupid, okay? They're stupid people. If they knew what I knew, they'd be buying this stuff. They're giving you a loan. They have to check boxes off. They even call it checking off the boxes. You'll hear it in phone calls. We're just checking off the boxes, Grant. I want you to know. I'm like, dude, this is stupid. Yeah. Right? How many times have you heard checking off the boxes?
With the bankers?
Yeah.
Every call.
Okay. So what's my net worth? What if you don't have any net worth? Well, guess what? There's only 4 ways to buy real estate. You buy it by yourself. You invest money in a REIT. That is not investing in real estate, by the way. Okay? I don't think I'm being unfair there. Or you find a syndicator, okay? If you find a syndicator, you need to find somebody that you trust, man. Somebody that's in the deal, like that dude that just called in, right? His buddies know him. His buddies know the deal. His parents know the deal, right? They know the deal. That's the kind of syndicator I'm talking about. Don't go with a syndicator, some public syndicator, and he's got 100 people investing in a deal. He's got no money in, and he wouldn't even buy this deal if it wasn't for them. And the other way to do it is with, like, if you could find a guy like me, okay? That you know the dude, you see the dude, the guy's on, like there's, I'm gonna tell you something. There's no syndicators that I know that are doing a real estate show. Is there, Ron?
Nope.
I don't know why.
Absolutely not.
I don't know why. YouTube's available to everybody, okay? We just want people to invest with us that don't have the time, don't have maybe the credit, okay? Don't have the net worth, you don't have the connections, you don't have the track record. Look, if you don't have these 3 things, okay, and you like the real estate game, okay, watch this. How could you buy a $40 million deal with $100,000? You can't get approved for it. You can't get the deal. You can't manage the deal. Okay? Ryan Secco went from 18 units to being part of 800 units overnight. Mm-hmm. He just took his money from his little deals, sold all that, pushed it into one big portfolio that we own, okay? And he has the leverage of that. $40 million. This is going to be about, this would be,
what are you looking for?
What deal is this? This is that 370 units, okay? Mm-hmm. 370 units. This is $57 million, actually, sorry. What's 17 million when you're with friends, right? Mm-hmm. 370 units, $57 million. How can you buy that deal? On the interstate in Orlando, you drive by it every day, okay? Next to it, it's 2000, what year is this?
This is 2007, right
2007, right next door is brand new product.
2014.
At $350 more per month.
Yep.
Okay? So I got a big deal next door to me. There's a $340 spread. See, this is what the bank wants to know. Do you understand that one day you're going to have somebody plop a building next to you and it's going to be competition to you? I'm like, yeah, and that's going to be good for this deal. So the point is this. I wanted to create a fund where my sister or my brother could throw $100,000 into a deal and ride on this deal, okay? This deal over here is going to take $17 million to purchase. I got to put $17 million down. Okay, and Robert Sislo, I'm gonna put $17 million in this deal. I still gotta manage the $40 million. I'm still responsible to Fannie Mae to pay this money back. Okay, and Robert Sislo can put $100,000, stay in Miami, never go to Orlando, and say, hey, you handle my 100, okay? I'm gonna pay him 6% a year.
Which is preferred.
A preferred return, plus I hope to pay him another 4% at the end of the year in a bonus, okay, because I want to pay myself a bonus too. And then my goal is to double this money over the next 5 to 10 years or sooner. I've never been that long in a deal, by the way, for a double. Most of my doubles happen around 39 months, okay? If you go back over our portfolio, which we're happy to share with everybody, our average hold time has been 39 months when I take out the extremes on both the long side and the short side. Next caller.
All right, you got Aaron in Nevada.
Aaron, how you doing? Grant here. Good. Thank you for calling.
How are you, Grant?
Good. How you doing?
Thanks for taking it. Good.
Did she send me it?
Yeah.
What is your question?
Okay, so my question is, I'm interested in this $5 million property in Honolulu.
Okay.
And my question is, I would have to do like with investors.
Yeah.
So if I'm looking to get investors, should I create a LLC or something, or a business, or should I just create like a slideshow to present to them?
Yeah, no,
Like,
you
I
definitely don't need an LLC. You don't need anything right now. What you need is about $2.5 million. On that deal is going to take a lot more money down.
I have to have my own money.
No, you don't have to
Because
have.
I wanted to do it without having any money.
Yeah. Okay, so you want to do it without having any money.
Yeah.
So what I'm telling you is you need to think about you need about $2.5 million for a down payment to do that deal.
Okay.
Here's going to be her problem. Okay, her problem is going to be this. Are you going to try to get a loan on the deal?
Probably from someone private, not necessarily from the bank.
Yeah.
Well, I've never gotten a loan from a bank before, so.
Yeah. Dude, this is a huge deal for you to do by yourself in Nevada to Hawaii. Are you going to move to Hawaii and manage it?
That's what I would like to do.
Yeah, no, sounds like a fantasy island to me.
Yeah.
Like this is not even real. Like why don't you buy something right there in Nevada?
Well, I guess I should probably. Well, I was thinking about buying my own houses my own house in Reno, because Reno's so good for rental investment, or it's so good as investment property because it's going up like crazy right now.
Yeah, it is. It's hot over there. So it's a great market to be in right now. All I'm saying to you is, look, if you can't make sense of deals in your own neighborhood, this isn't about falling in love with a city, folks, okay? This isn't, I love Hawaii, I'm going to go there and surf every day. Dude, this is work, okay? These deals are work. I remember one day getting a phone call, hey, Grant, we just had a problem in one of the properties. Really? What kind of problem? A guy and another guy. Y'all know where this is going? A guy and another guy end up having a guy problem, and one guy shot the other guy out there in the middle where the guys go to shoot each other on my property. I'm like, wow. Did the guy that gets shot, was he the tenant? Yeah, he was. Good. Did we collect his payments for the month? You know what I'm saying? I mean, dude, it's a real business. Like, it's a real business. You got to know, did people pay or not? Like it's a tough deal. So you can't do that. You can't manage that deal from Hawaii. By the way, everything I'm saying to her, the bank's going to say to her. The lender, whoever the private lender is going to say to her, by the way, private lenders can be as much a pain in the ass as a bank can. The investors can be more of a pain in the ass. So they're going to all do this. What do you mean you're going to buy a deal in Hawaii? $5 million deal. You're going to raise all the money. Now, so she's got to figure that deal out. She needs numbers, right? In Hawaii, I know because of price compression, higher prices, she's going to need more money down. The bank's going to want more protection. By the way, a bank, the reason I'd rather a bank than a private is because banks will provide you with protection and intelligence, okay? Cover, intelligence, okay? Fannie Mae provides me with intelligence. You understand? They're like, Grant, what if rents come down? Oh, wow, wasn't thinking about that. Grant, what if this happens? Oh, wasn't thinking about that. Hey, Grant, what if we think these rents are a little higher than what they should be in that market? Oh, I didn't see that. So the bank, in my case, particularly the bigger the deals get, the more interest, the more services, the more intelligence the lender will provide you, okay? Even a private lender is going to look into this, though. He doesn't want to lose his money. Okay, next caller.
All right, you got David and ATO.
Was that too hard on her?
No.
Aaron? Okay.
No, but I like what you said though about, she's like, do I need an LLC?
No,
do I
you
need all
don't
this
need
business stuff. You always say the first thing you need is you need
money.
You need money.
A deal and you need money. And the bank, by the way, the bank's going to tell you what kind of setup they want. Okay,
Yeah.
Aaron? So the bank's going to tell you, hey, you need a single entity LLC to buy that deal. Or you need blah, blah, whatever they're going to tell you. The bank, most people try to figure out the loan documents before they get the deal.
Yeah.
If you go to real estate school, you're going to spend all this time talking about all this stuff that doesn't have anything to do with anything. I don't even know what an easement is. I don't know the difference between a title search and a plat something. I don't need to. I need to make sure it suffices for the bank. I need to spend my time and energy making sure the deal is going to make money. Because that's the only reason I'm buying the deal. I'm not buying it because of the title, the sidewalk, the easement.
That's right.
And by the way, the more hair on the deal, the fewer people are going to be looking at that deal. If I can get rid of the hair, get rid of the issues, that sometimes is where the value is. All right?
You got David and ATL.
Big D, what's up?
Hey, Grant. Appreciate everything you do.
Oh, thanks.
Giving this information for free is amazing, man.
Yeah. Thank you, man. Appreciate it.
I have
Best show on TV right here. Best show on TV. Today's Show, Good Morning America. What's that crazy dude on the stocks at night? Jim Cramer? Cramer ain't got nothing on me. Booyah.
Sorry, David. Go ahead.
No worries, man. I was just wondering, when you were 28 years old, you said you were viewing properties for like 3 years. And you weren't buying anything. What was the conversation between you and the broker? Because I don't want to waste the broker's time.
No, but dude, you're gonna waste their time, and don't even feel bad about it. Okay.
Okay. What was the conversation for them to even pick up the phone though?
Yeah. No, that's a better question. Like how do you even? That's when you got to figure out your pitch. You know, the first time I made the pitch, I'm like, look, man, I'm not really buying anything right now, and I'm listening to the dude, right? And the interest went down the freaking tubes. Man, I just want to be straight with you, man. I don't want to waste any of your time. He's like, well, then don't. And then they wouldn't call me back. And I'm like, shit, I got to change the pitch. And the pitch evolved into this. Dude, I got the money and I'm going to buy something this weekend. I mean, I'm walking around like I got erectile dysfunction on super reverse. Okay, I'm like walking around. I have to buy something this weekend. My 1031's about to end. That's code. That's real estate ED
got it.
Backwards. I got a 1031 clocking out. Okay, hey, can you call me back right now? And then watch this. I hang up the phone. Ryan see me do this. Call him right back. Hey, dude, I hadn't heard back from you yet, man. It's been 2 minutes. I'm clocking out, dude. I need a call back. Please get me a deal. Okay, I made that phone call for 3 years until everybody in the city of Houston knew I was a jack. That's cool. Everybody used to say, he's a jack. Like, I swear, if you go back to Houston today, there's guys that are like, I remember you, dude. You'd call me all the time, man. You're a total jack. Yeah, total jack that ended up with $750 million worth of real estate deals going to Bill.
That's right.
So you got to pitch it, bro. You got to pitch it. And by the way, he's the one that went and got that dumb bullshit real estate brokerage license. He's the one that did that shit, dude. Okay, he could have been a teacher.
Okay.
He could have been a policeman. Okay, he could have been a freaking veterinarian. No, he decided to go be a real estate broker. Well, guess what? That comes with phone calls, bitch. Okay, you're the one that decided to work for 1%. Don't tell me, man. Oh my God, dude, don't oh my God me. You're the one that picked that freaking job. By the way, you're the same dude that looks at this stuff every day and doesn't buy any of it. So don't tell me about wasting my time. If you collected as much real estate as I have in a short period of time that you've been dying, okay, you wouldn't have to take this phone call anymore.
Yeah.
You'd be making a phone call rather than taking a phone call.
What's his name, Joe? Hey, David, and go back and check out some of our previous shows because Grant goes over the 10 questions that he asked the broker. And what Grant's saying, and I hear him all the time, he flips the conversation. So instead of you dumping on the broker, because the broker knows when you call him and you're like, hey, man, I'm just looking at deals. Hey, this. He knows you're a jack, right?
And don't mention LoopNet when you make the phone call.
Yeah.
That'll kill you right there.
Yeah, so go into it saying, hey, look, I'm super interested in your deal. And then you go through your 10 questions, right? Hey, who owns the deal? When's the last time it traded? What do you think about the deal? Because one thing I've noticed about brokers is they're just human beings, right? So they want to tell you about the deal because they're sales guys.
Yeah. And by the way, you might want to congratulate him about the deal he sold too. Like, hey man, good job on that other deal. I tried to get on in that, but you know, like you gotta You know, it's like when you go see a car salesman, okay? You go see a car salesman, don't tell them you're just shopping. Tell them, hey, I'm here to buy today. Okay, they're so jaded.
Okay.
They're so jaded, they're gonna be like, huh? I'm here to purchase today. Oh, and by the way, if that's not enough, price is not my only issue. They're gonna think you have bad credit right away. Because it just sounds too good,
Yeah,
dude. It's
yeah,
like
yeah,
nobody talks
Okay,
like
what's
that.
wrong with you? What's wrong with you? What STD
Something's
you got?
wrong with you,
What
man.
STD
Okay,
you
what do
got?
I got to do for this deal? So
Yeah.
okay, good. So yeah, you look. The point he made was, what's David? David just said, "Hey man, I shop real estate for 3 years. For 3 years, I did. By the way, I thought I was going to buy something. I was too scared, and the reason I was scared is because my knowingness was so low. Okay, like Erin. Erin's going to go get butchered if she goes and tries to do that deal right now. That's why I said, Erin, go back and do the deal in Vegas. Do your first deal in Vegas, okay? I mean, she sounds like she's 12 years old, so you got plenty of time to go to Hawaii, right? So like, go do your first deal. Go do your first deal. Put a couple deals together. Everybody's going to tell you the same thing, particularly when it comes to debt. So let me wrap up with this. When it comes to the debt game, first 3 places I went to, I shouldn't even have been there. You got to know what kind of money that bank lends, okay? When you go to debt, ask them, do you do these kind of loans? Do you do these kind of loans? Okay, and be specific. If it's a single family residence, 4 units, if it's a commercial, be very specific. Commercial, 8 units, produces X, has a DCR of, right? You know what that is? Debt coverage ratio. Okay. If you're going to borrow 100,000, if the mortgage is 100 grand a year, it's going to pay you 120,000 before the debt. That's called the DCR. 120 is typically what the banks are looking for. Could be a 130. Okay. When you're talking to the bank, do you do these kinds of loans? Okay. This loan does a 120 DCR. It's in a great area. I have experience managing property. Okay, really? Okay, even if you don't have experience, by the way, I have experience managing property. It's a third party. Okay, so I have a third party management company that has extreme experience. My cash is coming from, okay, no, we don't do those kind of loans. Good. Who does those kind of loans? Who in the market does that type of loan today? And then you want to go to them. I wouldn't go to a hard money lender first. Where'd you get your first loan, Ryan?
It was Wells Fargo.
Well, Wells Fargo, local bank, local. You went in and said what?
Well, it was my first home. So it was the FHA loan, Wells Fargo. I think there was a little, just standard. And then my second one was a mortgage company. They kind of got a little more.
What kind of deal was that? What was the second deal? Another
25% down. No, it was a fourplex.
Okay.
Yes, it was a 4-unit, 25% down.
Who sent you to the mortgage broker? How'd you know to go to them?
Google.
You went to Google.
So Wells Fargo turned me down, right? So I've been getting
for
told
the second
no.
loan.
For the second loan, they said no. You don't check the box, right?
Check the box.
You don't check the box.
Yeah.
And so I went and I found a mortgage company. I asked a buddy because I joined the local real estate investment association.
Yeah.
And so they get guys would
What'd
come
that
and
cost
speak. $125 a year
to learn what I'm doing for you.
Yeah.
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 And on the show.
On the show.
Yeah.
No. They wouldn't teach you this kind of stuff.
What did they teach you there?
They would teach you how to fix and flip. They were focused on small deals.
Okay.
1 unit, 2 unit, 4 units.
Yeah.
And it was like a bunch of 20-year-old kids that were hungry for real estate. It's just a good place to kind of. But anyway.
Okay, so did they ask you your net worth?
Well, I didn't have a net worth, but they asked how much money I had in the bank just for the down payment.
Yeah. He's like, I got a net worth. It's zero.
It's zero. It was actually negative because I had student loans.
Yeah. Okay. So even if you have no net worth, folks, you got to start somewhere. So what? So you know what? Maybe you borrow somebody else's net worth. Okay. Maybe it's me and my partner. Maybe you got to. Maybe do what you got to do. Okay. Hey, yeah, me and my partner are going. Maybe I make my mom a partner. Maybe I make my mom a partner in the deal. She doesn't put any money in the deal, but I borrow her net worth. Mm-hmm. Like you got to decide. That's why first show I ever did here, probably the most important show I ever did was on one thing. Okay. You got to know you want to buy that deal. in that neighborhood. You want to know you want to go to sleep. When we buy a deal, I ask Ryan every time, dude, it doesn't matter whether it's 100% of my money, whatever, it doesn't matter. I'm always, do I know I want to own this deal next week, next month, the next time there's an economic contraction? Do I want to own this deal do I want to own this deal if it doesn't make me any money? Do I know I want to own this deal? Because if I know I want to own this deal long term, dude, I know somebody else does too. And somebody else wanting to own it means I can pay my loan off, I can sell it, and I can make some money. Okay? Look, if I can help you buy your first deal, all you got to do is hit us up here, post in comments, send me the address to your deal, post it in comments. We'll look at the deal. Maybe I'll have it on the show. You can call in next week, next Monday. Every Monday we do this. If you're on iTunes or Stitcher, you can email me or Ryan at cardonecapital.com. Ryan.
Cardone Acquisitions.
No, change it, man. I said change it last week. God damn. CardoneCapital.com. Ryan at CardoneCapital.com. Ryan at CardoneCapital.com. Grant at CardoneCapital.com. Just email me your deal. Okay, anything I can do to help you. Get you in the game, get you in the real estate game, get you in the passive income game, get you in the game of gains. Oh, also, if you want to invest with us, CardoneCapital.com, CardoneCapital.com. We are, check this out, $40 million fund. Our first 3 funds already took in $30 million. This fund will close out probably in the next 10 days, 12 days. So if you're going to play with me on this deal, let's roll, okay? I got some great product getting ready to fill it in. It's a great time for real estate folks. We move around to different markets. I go where I have to go to get deals. So we're looking at product right now. I have a sheet in front of me, $387 million worth of real estate deals right here on this one sheet of paper. Here's a portfolio in Mobile. We just offered $80 million for it. They came back. They all upset with me. Madison Oaks, I shouldn't say the name of them, $33 million. I'm going to get that deal for sure, I guarantee you. The Retreat up the street, the Retreat, I can't tell you the last name of it, $58 million. Here's another deal, Place on, okay, $57 million. I know I'm going to get that deal if we want to close on it. 79. Over there on the, what's that called? The Gulf Coast. Beautiful property on the freaking, like on the ocean.
Yeah, cost to build that thing is probably 170, 180.
I'm gonna buy it for 117. Cost to build is 170. And then there's a deal in Houston, $87 million. So look, if you want to come play with me, we rolling and we rolling fast, okay? I'm very, very conservative how I purchase things. Once I know, then I roll hard, okay? Look forward to having you on our team.